All right, what's going on, everybody? How are you guys doing? Welcome to another daily chart breakdown where I show you the ins and outs of what I'm personally doing on a day-to-day basis. Our goal of our company, of our channel, is to help people get to the point where you don't need signals, you don't need help. You can be able to build your account slowly but surely on your own time by yourself. And if you like our content, you want to be able to get access to more, go ahead and click on the like button right now. I'll wait. Like, click, done. Thank you. Go ahead and click on the like button. It shows us that the videos that we are putting out are helping you out. All right, greatly appreciate it. So last time we spoke, I literally said this is what's going to happen. This is what I would personally be doing. That's exactly what has happened. So let's go back to exactly what this trade is all about. We are looking for, and mind you, I said, hey, listen, there's a possibility that price can go from point A to point B to point C and then push to the upside. There is a possibility that it was going to do that. Now, by this point, I don't really think that it was going to. I think I said, I'm 80% sure that it will continue to the downside, but there was still that 20%, just in case, I think it's best to, have both mindsets. So the main trade is this: point A, point B, point A, point B, point C, 50% for the continuation, all the way down to 1.07 area. All right, so that's the main trade. We saw that 50% got hit, and then we were looking for bearish engulfing pattern to form on a lower time frame. That's exactly what happened. That's why we entered in on the first trade over here. This is when we entered in the first trade. Price was pushing, and then we had a break of structure on the lower time frame for higher highs and higher lows forming on the lower time frame, which is on the higher time frame. And this is all by definition, literally exactly what we teach in our course on FxProNow.com. It's over 15 hours of content that you can be able to get access to. Literally teaching you exactly step by step what I do. But either way, lower time frame, higher highs and higher lows, uptrend. Higher time frame, just a retracement based upon this particular move right here, being the fact that it actually broke its structure right here. This is the continuation of that break. This is the retracement of that break. This is the true entry for a 4 hours move for the continuation. So what we do anytime that we see that there's lower lows and lower highs that are forming on the lower time frame, we pull out our fibs based upon the higher time frame, H4, point A, and point B. Go figure, the fact that it's literally right on our key level. Beautiful key level. If you don't know about key levels, you can be able to check out our free 1-hour Forex training on FxProNow.com. We have a bunch of content on there that shares that, right? Point A, point B, we see that 50% got hit. I could have gotten a way better entry. Because I saw that it was at 50%. I'm like, yo, I can be able to do it. But I decided not to. I got it in a little lower, which is unfortunate. But as far as the first trade, still in. And as far as the second trade, let me show you how I did this. Visibility, let's go down to minutes, M30. No. As far as the first trade, I actually got out of it, being the fact that it passed that 38.2 area, which I'm kind of tight about. I may change it to where it's point A, point B, point C, close out at 23.6. I think it'll be just smarter. Because the rate at which price stops at 38.2 is not that high. So I'd rather collect a good majority of the money than lose more than a third of it. And if you don't know what I'm talking about, go ahead and leave a comment so I can be able to clarify in writing. Anyway, so from point A, point B, we see that right around the 50% area, it's starting to slow up. Cool. Go into the M30 time frame, start looking for bearish engulfing patterns. And we saw many. And once I saw this one right here, I entered in. Right? Well, I saw this one, and then from there, on the 1 hour time frame, I wanted to see how it looked. And it didn't really look too good. So it's not the one that I actually entered in on. I saw that price was doing all of this, and I entered in. Right? I saw price kept on going, and then I entered in again for a second trade. I saw price start to push up, and I got out of the first one, but I held the second one. right? I usually don't do that. I usually just hold my trades, but I didn't know if price was going to keep on going to 61.8. And it was the weekend, and I was just, I was cool with just having one and not having both, which is unfortunate because I could have been more than double where I'm at right now. I should have just kept it, but I didn't. Either way, we see that prices, bouncing around, bouncing around. Once I saw price go up here, I was like, oh. Then I saw this, then I saw that. I'm like, oh, I should have kept it, and kept on going. Either way, right now I think I'm up 40 pips. Yeah, 46 right now. And I believe that this will continue. The first time that price may find some type of pullback will probably be right around this 1.09 area. And then we'll look for more entries. Most likely, price will go from point A to point B, get up back into this area right here. We'll find more bearish engulfing patterns that's going to form around this area after it pulls back. And then we'll go for the continuation. I'm definitely going to keep this, being the fact that we can obviously see that this will continue to the downside. Telltale sign is the fact that we had this breaker structure right here based on the higher time frames, daily time frame. Breaker structure, retracement at that area. It doesn't have to be at that area, but we do see, the retracement for the continuation. So I feel more confident keeping this trade than this one, right? Because the reason why I kind of felt is because there was a possibility based on the higher time frame that this could have held support for making higher highs and higher lows on this higher time frame, and that's not what I would want. All right. So I spit out a lot of verbiage, a lot of stuff. If you're brand new to this, listen, I understand you're probably like, what the hell is he talking about? I get it. That's why we have our basics completely for free. What I'll do is I'll go ahead and put on our basic section over here. I'll have a basic section over here, and also I'll have the last video that I was talking about, specifically about EURUSD, where I'll show you, the last trade, or it's going to show you the newest trade based upon what we're currently talking about right here, all right, guys? So again, our goal is to be able to help people get to the point where you don't need any help or anything like that. And that's why we have on FxProNow.com a free 1-hour Forex training that you can be able to get access to. It's helped out. Over 4,000 people have watched that webinar. All right, so I think it's working, and I think it'll help you out as well. If you have any questions, go ahead and leave a comment below. Let me know. I want to make this like a conversation, more than just me talking. I want you to talk back. All right, and if you haven't already, just go ahead and just click on the like button, and then on the subscribe if you want to get access to more of these videos. All right, really appreciate your time, guys. Peace.